Welcome to the Decent People Podcast, a production of Decential Media, where we're committed to telling the stories of the founders, builders, and visionaries who are creating a new decentralized economy and internet experience. You guys know it as Web3 or blockchain, and we're going to bring you the smartest and most interesting people in the space for intimate conversations that reveal their background, how they got into crypto in the first place, and what they're doing today to make a decentralized future a reality. Thanks so much for joining us. Make sure to check out our site at decentral.io. Now, to the show. Hi, and welcome to the latest episode of the Decent People Podcast. I'm your host, Matt Leising, and today I'm joined by Ryan Selkis, who's been in crypto for just about as long as anybody's been in crypto. Currently, he is the founder and CEO of Messari, which is an absolute behemoth when it comes to all things crypto, like analytics, research, visualizations, a newsletter. It's just been fascinating to watch you build the business over the years. Ryan, how are you doing?
Doing great. Good to be here, and thanks for the invite.
Yeah, of course. I think we got to know each other first when we were both sort of writing about Ripple and XRP. As I recall, we both went on Laura Shin's podcast. So to give listeners just a little backstory, Ripple is a crypto firm that's trying to replace the correspondent banking system. They have a cryptocurrency called XRP, which they want to use as the rails for when a corporation that might have operations in Japan and Europe and the US needs yen and dollars and euros. So their pitch has been that XRP is going to replace those rails and that all the major banks are just a second away from adopting it. So as a reporter at Bloomberg, I started looking into that, and I talked to all the banks I could and heard basically across the board that none of them were about to dump the dollar for XRP. And so I wrote some stories to that effect, which did not make me very popular among the XRP army, which is what their supporters are known as. And while I think you and I agree that Ripple, it's a good idea, I think we disagree with the way that they've gone about it in pitching it to retail investors. So did I describe that accurately about your stance on Ripple?
Yeah, I mean, my stance hasn't really changed. I think this conversation is almost 4 years ago that we had that with Laura. So I since then the SEC has filed a lawsuit against Ripple for securities law violations, and I actually disagree with the SEC and rooting for Ripple in this particular case. It's pretty nuanced, but essentially, I think the problem is really with the way that we define crypto assets, and it's a policy shortcoming right now versus a existing securities law issue, right? So I think Ripple, their XRP currency is a currency, but the way that they've touted its value and its potential has been at odds with what they've said behind closed doors. So it's essentially become a cash machine for them to enrich the company, enrich the founders and the shareholders, but at the expense of pretty significant underperformance from an end user and investor standpoint. So it's I think it's the way that it was executed versus the securitiesness of the asset itself, which is what they've gotten into hot water around more recently. So
yeah.
But
the CEO there is Brad Garlinghouse, and I laughed when I was reading your 2022 thesis on the crypto market that you and Brad don't exactly exchange Christmas cards.
That's right.
Yeah. I actually got one from Brad. It was a bag of shit delivered to my front doorstep. So
wouldn't be surprised.
Yeah. Well, I have a ton of things I want to talk to you about, but first I'd love to know where you came from and how you got here. Where did you grow up?
So I grew up in the Northeast, went to school at Boston College, and started my career out in Boston. Was a first in venture capital, and ended up starting my first company at 25. Bunch of reasons that didn't work out, but I was in between going to business school or figuring out what I wanted to do next. And that happens to be when I fell down the Bitcoin rabbit hole in mid 2013. So ended up spending a long weekend, which turned into a week, which turned into a month, kind of going deep on it, and decided, I wasn't going to do business school. I was going to try to stick around and build and figure out how I could be useful.
And we will definitely get onto that. But what were you like as a kid? Were you into sports? What did your parents do, and what was it like a life as a kid for Ryan Selkis?
So, I think I was really ahead of the curve academically, especially when I was little. I'm an only child, so I read a lot. Kind of growing up. I mean, I had a bunch of friends, but it wasn't like I was outcast or just kind of up in my room all the time reading or antisocial. But I think there was kind of like age 0 through 12 where I was a voracious reader, and then probably 12 to 24 when I essentially stopped reading, played sports, kind of messed around, and decided to prioritize having fun and kind of getting by on the first 12 years of investment that I'd made. So I've always been pretty curious, but I was definitely like, after age 12, basically no video games, all sports, and athletics. And
what did you play?
So it's basketball, football, and baseball. I only played football 1 year, my senior year, because I never wanted to have an injury before the basketball season. But I ended up playing my senior year because I knew I was probably not going to play college ball, which I ended up not playing college ball. I'm quote unquote only 6'5". So the schools that I was looking at, I would have had to be a point guard or shooting guard, I think. And so I mean, I had just good, solid kind of family and upbringing. Nothing too too interesting or spectacular to kind of talk about, kind of early on. And had the opportunity to go out to Boston College. Good 4 years there. It's a great school. And there's actually there's a sneaky number of BC alumni that are kind of floating around crypto. CMS, Dan Matuszewski is one of them. So there's definitely a handful of us floating around.
Yeah. Did you work jobs in high school?
I did. I don't really talk too much about my childhood and kind of earlier years though, because then there's like all sorts of OPSEC issues. So that's why I'm starting to smile a little bit and be a little bit cagey. But I always from the age of like 14 I worked. So
I just for some reason I figured you probably had some really fun high school jobs.
Yeah, well, so I'll skip over everything like pre-age 18, and instead I think one of my favorite jobs in college was actually, so I was a mover in college, and just basically just in the 90-degree heat, like getting people in their dorm rooms, and that was like 18-hour days, 20-hour days, like manual labor, but we got paid a small fortune, and it was great. And a good group of guys, and then that same group ended up because they're a year and 2 years older, they ended up hooking me up with a job as a late night janitor at our sports complex, right? So the basketball courts and weight room, everything. And that sounds like a pretty shitty job, but it actually was amazing because I had lobbied our boss to pay us by the shift, right? Because we were supposed to do it in 4 hours, and we figured there's just a lot of messing around. We can do this in 2.5. And so we settled on 3, and he was going to up our rate or whatever, so we weren't like negotiating against ourselves. So we kind of notched a win. And then it would take us 2 hours to actually do it, like once we negotiated that. And so we had an hour, plus we got to like lock up the gym afterwards. And, it got to the point where we would like invite some of our friends in for like, late night basketball, and, like just literally have the court all to ourselves at like 1 a.m. and have like different like tournaments with our friends and whatnot. So that was awesome. So we got paid, really good hourly rate. We got to play basketball for 1 out of 3 hours. And then, we got to sneak all of our friends in once we decided we didn't care if we got fired, because we're like,
yeah, that's great.
Senior year and pretty well set with jobs after that. So, so there's a lesson there, which is, the dirty jobs pay well and you can get away with a lot.
Yeah, for sure. Yeah, and being efficient is always really great. I've had jobs where same thing, I could get the work done in an hour, and then I'd had 3 or 4 hours to just kind of do whatever. So coming out of college, where were you headed? Was it finance related, or what was interesting to you at that point in your life?
Yeah, I went, so one of the reasons I went to BC, there's a really good undergraduate business school. It's actually, it's consistently like one of the top 5 undergraduate business schools in the country. So it's, I was always kind of like drawn to that because, both of my grandfathers were entrepreneurs and, kind of like family businesses in the, on either side. And so, I knew I wanted to do something in, business. It's multifunctional, right? It kind of jack of all trades type of skill set. And it was just, interesting to me because you basically create something from scratch, or you manage your own hours. And of course, that's like a little bit of a false choice because the quip around like entrepreneurship is, I work 60 hours a week for myself or 80 hours a week for myself, so I don't have to work 40 for someone else, but I wanted to have that skill set. And so I went for the hardest job available for finance, which is investment banking. And that's another interesting story where it was actually right around, it might've been my birthday. It was right around my birthday when I was an alternate for one of the last interview slots at JPMorgan, and one person no-showed their interview. So I was like literally clicking refresh every like 5 seconds at 6:30 a.m. or 7 a.m. when the alternate slots open up. I ended up getting one of the last alternate slots, crushed the interview, and then was one of the 2 people from BC that got an internship at JPMorgan that summer. So again, like one click of the refresh button kind of changes trajectory. I hated investment banking. The summer was miserable. And of course I signed on the spot because they offered you a fat bonus and I just wanted to coast senior year. And I figured, I can deal with 2 years of pain. But right before the financial crisis hit in kind of full force, that fall of 2008, I graduated spring of 08. And about 2-3 weeks before I was supposed to start, I got a call from HR at JPMorgan. JPMorgan had just acquired Bear Stearns. So I was a synergy and my, they didn't fire me, but my offer was deferred for a year and they're going to put me in a different division at Chase. So fortunately, I hadn't really fired any of the bullets that I had, in terms of like social capital the fall prior, because I'd signed on the spot. So I went back to those same friends that had like reached out and said, hey, we got to get you in here and like, come meet with our team, the folks that were like a year or 2 ahead of me in school. And I was on family vacation. I remember I was in San Francisco, so like the wine bar cocktail hours, and I told my parents, I gotta go make a couple calls. Something just happened at work. It's fine. And they kind of looked at me skeptically, and then I was like, okay, it's not fine. And I took like literally like 4 glasses of wine, and I went upstairs to the hotel room, and then made a few calls and ended up getting fast tracked for an interview at a venture capital firm called Summit. Same thing had happened with like the internship interview, right? There just happened to be one slot open at the last minute. And I did well in the interview and kind of got fast tracked and went from the valley of despair, what's going to happen to the start of my career, to basically skipping a couple of years of banking, which is usually a prereq to get into VC.
Yeah. What did you?
I had no right getting that job either. The only reason I got that job is because I had a couple much smarter friends than me that kind of pulled me through. But it was interesting to watch me go from a Neanderthal to a functioning professional in 3 years after a lot of blood, sweat, and tears from my first boss.
Did you have any inkling of the financial crisis to come as being kind of inside JPMorgan then, or what do you remember about that?
Not necessarily. I remember there was one day over the summer where this is summer 2007, and a couple of the big Bear Stearns hedge funds.
Yeah, that's what started it all.
Do you remember that, right? And then it was kind of a slow bleed from there. But that was like the summer of 07. those couple of hedge funds blew up, and that really basically just chilled the leveraged buyout market on the spot, because like LBOs were getting, back that, that summer, those couple of years, LBOs were just like coming into their heyday, and it was getting crazy. It was like 6-7 times, debt multiples that these private equity firms were coming in and basically like raising these companies and just completely crippling them. But I remember it because we had our LBO Excel model training the next day. And the senior analyst that was supposed to do the training comes in like 10 minutes late. He's all disheveled, clearly like crazy hungover. And, in hindsight, like these guys just basically realized in the middle of summer after like 120-hour weeks that their bonuses were like, had literally just evaporated the day before for something that wasn't even going to hit for like another 5 months. But you just like look at the state of the world and you're like, okay, we just spent like 120-hour weeks for the last 7 months, and we're going to have to do this for another 5, and our bonuses are probably no longer there. And I remember he sits down and, he opens laptop and he's like, all right, we're going to, talk about, and then, he kind of goes through his preamble, and then he just trails off and he's like, you're not going to need to know how to build these fucking things this summer. And he walks out of the room and all of us, like there's a bunch of like 20-year-olds and like 21-year-olds are just like, yeah. It was, I always remember that it was, one of the spots that kind of sticks with you from that summer. But
yeah, I remember, I think when Bear Stearns originally sold to JPMorgan, it was like at $2 a share. And I think that got redone, but I think I remember somebody went down to the Bear Stearns office in Wall Street where Bloomberg was near there, and they taped a $2 bill to the door, the front door. And so going through that crisis, like a lot of people felt like kind of freaked out that they were going to be, in a depression for the next like 10 years when the enormity of that hit. Did you feel that way, or how did that change your trajectory and what you thought you could do and what you wanted to do?
Well, I mean, I think you obviously learn a lot from stuff like that. There's a couple of things that stood out. Like one, when JPMorgan acquired Bear Stearns, I was like, our jobs are no longer safe this summer. I remember thinking that in like the March timeframe. And then of course it took them until like June, like late June, right before we were supposed to start, which was horrible. And I remember getting calls from a bunch of my friends that, had kind of experienced something similar. And they also had their offers deferred, and everybody was calling each other. Yeah. And my reaction was basically like, why are you so surprised? Like, I was like, I remember being like a little bit pissed that like I was getting all these calls from like my friends over the summer. And I'm like, how could you not even foresee this was a possibility? The fact that you could not foresee this was a possibility makes me think that your offer should have been deferred and mine shouldn't, because like I knew that this was a possibility, because this is how like the world works. But I kept in touch with several of them, and they're all obviously doing well, regardless of that minor hiccup. One other thing that kind of solidified for me is it sounds really trite, but people can't really understand how scary like bear markets are until they've lived through them. Like we get conditioned in crypto to just experience the most painful, like soul crushing, gut wrenching bear markets. And some of us have done it multiple times. So like, for me, product of 08, got into Bitcoin at the top in 2013, rode it all the way down, and through mid 2015, right? Then did the same thing all over again in 2018. So I've had 3 of these just massive downturns. And I would actually say I kind of had a 4th in between, because I more or less blew through all my venture capital savings when I started my first company, because I bootstrapped it for like a year and a half. So I've basically had like 4 resets. Yeah. There's scar tissue, and then there's like rings on a tree of scar tissue. Yeah. Which is what I feel like I've established. And frankly, I mean, that's that's invaluable, right? I'm 36 and I feel like I have the battle scars that, you know, a lot of people in their 50s don't have, right?
Yeah,
So
it definitely steals you. I
yeah.
remember Congress was voting on like a TARP kind of relief package, you know, after everything had just completely crashed in the fall of '08. The bill didn't pass, and the S&P just fell out of bed. It's just like the line down on the Bloomberg terminal was terrifying, and everybody was just really kind of like, holy shit, nobody's seen this in their lifetime before. And I'll never forget that day at the office.
The other thing I learned is that it's good to have cash. Because, you know, I didn't have that much, just kind of graduating from college, but I remember when the bottom fell out, you know, we were looking at stocks, some of like the 22-year-old analysts, and everybody's terrified, right? And we don't know what the hell's going on. Like, is our firm going to be okay? You know, are our jobs safe even? And fortunately, like, you know, venture is much more stable and resilient than some of the big banks, because, you know, private partnerships and whatnot. But and those fees are pretty steady. But, you know, I remember buying Apple stock for like 1.5 times their cash balance. Wow. This is like right after they'd unveiled the iPhone the year before, right? So like, this was a freaking rocket ship of a company. You know, now it seems so obvious in hindsight, but I remember, you know, I don't remember the exact numbers, but let's just say I bought it like 70, at like 1.5 times cash in the fall of like 2008. And I felt really good because it went up like 30-40%, and I sold it. And I'm like, don't do that. Don't sell your winners when like the thesis is still intact. And also, you know, think beyond a trading time frame. So I think there was some stuff that happened there, and also like early on for me with crypto, that more or less established that I am a horrible trader, but I'm a pretty good long-term investor. So I think that's been good too, to just buy, hold, you know, take some off the table when you see these kind of massive.
Yeah, it's a great lesson for crypto people. Who's the investor that says when there's blood in the streets, that's when you buy? Was that Buffett?
That's one of the Rothschild. I think that was the Rothschilds. And
okay, yeah.
When there's blood in the street, buy even when it's your own. Yeah, I think that was them. And then, you know, Buffett and Munger have a bunch of quips too. But
how did you first come across Bitcoin?
I first learned about it in 2011 during the debt sequester. Do you remember that? This was like the first big, not the first, but certainly like, I would argue that's like one of the beginnings of the breakdown in like partisan politics, in terms of like functioning governance, because 2011, it was like the late summer, early fall, they couldn't agree on a budget. And instead, they had to keep passing these like continuing resolutions. And finally, they realized it was ridiculous, right? Yeah. And agreed, okay, if we can't come to an agreement, we're going to have across the board budget cuts. That's going to impact defense, all the social welfare programs, blah, 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 right? Just cover to cover. Same line item just gets slashed like 15, 18%, whatever it was. And then, of course, they kicked that too. And when they basically blew through their own deadline and did not hold themselves accountable, or, you know, on passing a budget, agreeing to some compromise, or sticking to like the poison pill of like debt sequestration, the S&P downgraded the U.S. debt for the first time ever.
Yeah,
so
that was huge.
That was like, you know, so, you know, I think a lot of people in crypto might not even remember that, right? But but that downgrade, I started looking at gold, the kind of U.S. Treasury ETF, and then I learned about Bitcoin for the first time. And I had the right thesis, but I think I had the only trade that could have lost money, which was I shorted the Treasury ETF, bought gold, and ignored Bitcoin because I didn't really understand like how to acquire it, and I wasn't a developer. And counterintuitively, when S&P downgraded the U.S. debt, everybody thought it was a shock to the system, and so they had a flight to safety. And the flight to safety and flight to liquidity was the U.S. dollar and the U.S. debt.
So treasuries are going up.
So the Treasury ETF went like, you know, shot sky high. Gold was like net or slightly down. And then, you know, over the course of the next couple of years, of course, you know, Bitcoin just skyrocketed. But fortunately, I came back to it in 2013, so still relatively early.
Yeah, just a little thing on gold. I saw this amazing stat the other day. if 10 years ago you'd put $100 into gold, today you'd have $102. And if you put $100 into Bitcoin 10 years ago, you'd have something like $1.3 million.
That sounds like something from my co-founder's Bitcoin site, Case Bitcoin. I'll pull it up right now.
Yeah.
But
well, once you finally got your head around Bitcoin, what was it that appealed to you? What was it? An investment thesis? Was it the technology? How did you first kind of like come to understand it?
For me, I still had like the digital gold thesis. So when I bought my first, I bought it through bought my first through CoinDesk Coinbase, like so many other people, and I just did it because I thought the thesis made sense, and that like general directional bet against the competence of the U.S. government was still kind of core, and I consider myself like a pragmatic libertarian, but I certainly spent like a bit of time kind of thinking about learning about like libertarian ethos and whatnot during that time period. But it was very much like digital gold, and like the fixed supply element kind of made sense to me, just as a, hey, I'll put a little money in here and just kind of see what happens, is just like one position in my portfolio. And then it went up like 6x in a few weeks. And at the time I was winding down my first startup. So, I was like, okay, I'm like 10 months before business school would start if I end up going to business school. I blew through most of my savings, certainly all my cash, and basically all I had was like my 401k and whatever I'm going to do next, right, in terms of like career earnings. And I ended up liquidating my 401k. I used half to buy more Bitcoin, the other half to pay rent and kind of figure out cost of living while I got bootstrapped and figured out what was next. And then ultimately, started the newsletter, got to know everybody in short order, broke the Mt. Gox story, as you remember. And that got me in touch with everybody for better or for worse in the industry at the time, and ended up joining DCG. And
is that how you got to know Barry Silbert and then ended up at DCG?
Yeah, that was my first. Actually, my first interaction with him was through my newsletter. So there was an insiders only, or like Bitcoin pros, or like basically like the top like Silicon Valley people that were into Bitcoin. There was a private listserv back then, because the community is so small. You could literally have this like execs only group. And I had written a few things on Reddit, and CoinDesk was just getting off the ground. So like people don't understand, like our Bitcoin was like the homepage for Bitcoin news. And I'd written a few threads there, and I started this like, Tumblr blog. It wasn't even Medium at the time. It's Tumblr blog. And a couple of the guys in that listserv started picking up on the daily email that I was sending through MailChimp, and then kind of posting a Tumblr and the crazy South Park avatar and the 2-bit idiot and everything. And some of those guys were like, had passed links around the group, like this guy's really smart. I don't know who he is, but like he wrote this thing on Coinbase's valuation and numbers, and it's pretty, some of them were Coinbase investors, and they're like, yeah, actually the numbers he's floating are not too far off the mark. Who is he? Like, how does he know this? Is he, blah blah blah. And that pseudonym lasted for 6 weeks or whatever, and then everybody knew who was kind of behind it. But I got invited to that group, and then that was basically all the connections I needed to get my hands on the Mt. Gox documents and kind of meet the who's who there. But Barry had he and I actually spoke before Mt. Gox in like January, because I was actually thinking about doing a stable coin, ironically, with the person that ended up going to Circle and helping with USDC, and is now part of the Boston Fed and one of the co-authors of the CBDC white paper. So like he and I actually talked about doing like a stable coin like way back in 2014. And we just had like a landing page and some like high level ideas for how it could work. But I'd spoken with Barry about that, talking about like potential funding for it and whatnot. It was a quick call, because we didn't have a company or anything. It was just an idea. But I think that was the first touch point. And then Gox and hilarity ensued, and all the BitLicense stuff that summer. So I was pretty active, even though I was independent and unaffiliated.
What was the pitch that Barry kind of came to you with about what he wanted to do with Digital Currency Group?
It was, I mean, honestly, it was kind of the other way around, because I had basically, tweeted about Barry building like the early parts for like a Bitcoin Berkshire Hathaway. And I started to write about it because I knew there wasn't that many companies, right? So you could like figure out like who was doing what and kind of what the building blocks were. And I think he sent me like a DM or an email, a private message of some kind, and was like, "You're not too far off the mark." And I said, "Hey, we should get together, the next time I'm in New York," because I was going to meet some other folks in New York. And he and I ended up catching up sometime in July, and I was meeting with a couple of other companies. There was like 5 at the time. I was talking to all of them about, kind of full-time jobs. And I went in and I met with him, and I knew that was probably the place that I could build the most, because there was, remember at the time it was second market, like it was this old non-Bitcoin company. So he was going to be dragging a bunch of folks from like that old business. And
yeah, that's where he was offering stock in companies that weren't public. Is that right?
Yeah, that was second market.
Yeah.
Right? And then that ended up, that business, sold for, just a tiny bit to NASDAQ as kind of the rest of the really interesting assets kind of came into the fold at DCG. But I think I was with him for probably about 5 minutes before he offered me a job. And most of the conversation was about, okay, here are the things that I think I'm good at. Here are the things that I want to do, like short, medium, long term. And there's a few different ways that I could go and kind of be deployed if I ended up joining and more or less, like, I think I know what you want. You want someone that knows this industry cold and is like gonna just like grind and build with you, because there's not that many of us still.
Yeah.
And so it was pretty smooth. It wasn't like a real big pitch. And from kind of late 2014 through 2015, I helped kind of lay the foundation with him, did a bunch of the blocking and tackling and, kind of behind the scenes work and seed investing, just kind of, continuing to like clip those checks. We recruited Melton, who's actually a mutual friend from MIT that I got to know because I'd accepted my offer at MIT, but then remember I didn't go. So, he had worked with me over the summer at my previous startup that didn't pan out, just as a volunteer because he wanted to be in this incubator. He ends up going to school, starting the MIT Bitcoin Club, meets Melton, introduces me to Melton, and then she joins DCG. And so this, I'm talking about Dan Elitzer, who then went to IDEO after he did the MIT Bitcoin Club and that whole experiment and airdrop. And now he runs a company called Nascent. So like, there's all these like interweaving.
Yeah, small world.
Stories, yeah.
I mean, back then, for sure, Bitcoin was still a dirty word among a lot of people. What about it made you not worry about its future? Where did you get that confidence to just kind of dive into it and want to build and create, like build it out basically?
I don't know that I had like religious confidence in Bitcoin success and crypto success in general. I think my feeling instead was, if this works out and I pissed away 2 years and $250,000 on business school instead of like going full throttle, I'm going to regret it, because I'm not going to be, I will have lost 2 years to like much more talented people. It's kind of the way that I thought about it. And I'd always rather have like an unfair edge that comes with like a network and just being like a little bit earlier, faster, versus trying to be smarter or like outwork people. Like I work hard, don't get me wrong, but I would prefer to be slightly lazier and earlier, always. And so,
well, it's back to doing your shift in 2 hours, right? If you can get that extra hour for fun.
Exactly.
And get paid for 3 hours. Why not?
There it is full circle, right? And so, the other thing that was like a margin of safety was, okay, Andreessen's talking about this in the Wall Street Journal. Fred Wilson invested in Coinbase. There's like multiple ETF proposals. Like this is something that really, really smart people took speculative, like religious level bets on. Wences, of course, right? Like the Godfather. And so me, at the time, 27, 28, however old I was, that was not as risky with that kind of larger narrative in mind than it would have appeared at first glance. So it was one of those things where, okay, worst thing that happens is I have to get a real job and I have to, figure it out, or, go sell real estate or cars or, whatever. Like I'll figure it out. It's not, something that was really going to cripple me one way or the other.
So then you went on to build out CoinDesk for DCG and got that up and running. I'm curious, when did the idea for Messari come about? And what I think what you did is you created a sort of one-stop shop for things that weren't necessarily maybe all in the same place, or help me understand like what that impetus was.
So CoinDesk was a turnaround. It was nearly one of the bear market casualties in 2015, but they'd done a successful single-day conference in New York called Consensus, and I had recruited a team from Money 2020 to build a big event franchise under the DCG umbrella as like our next business. And the pitch was, we should, like, CoinDesk is running out of money. It's going to be basically scrap metal in a matter of months, and there's not that many suitors for it. But if we had that business, could convince some of the core like editorial folks to stay, and then put it together with this professional events team and the budget to run like a larger scale event, that could be the engine for the business and the turnaround like early on. And so that's exactly what happened. So in the course of 18 months, 7 or 8x revenue, got the business to profitability, and built the engine that now is Consensus. And Pete Rizzo, who and Stan, who's now over at the Block, those two held up the entire like crypto editorial ecosystem single-handedly for like late 2015 and 2016. Yeah. That was CoinDesk. That was basically it that everybody read. Yeah. They got it done, and then of course now it's a big edit desk, and those two deserve all the credit. I was just kind of pulling the strings behind the scene, making sure that the bills were paid and we got people in the door for the carnival.
Yeah. And then what about Messari? Was that something that was bubbling in the back of your mind that you wanted to do, and the time just came to go and try it?
Messari was a byproduct of the ICO boom, when everything was basically going vertical, and for the most part these things were just white papers. So my co-founder Dan, I'd gotten to know previously. We'd invested in his earlier startup at DCG. It was called Digital Currency Council, I think. It was almost like investor accreditation for Bitcoin, and then they pivoted to something called Sabre. And Sabre was like an on-chain analytics, for law enforcement, kind of like Chainalysis or something like that.
Sure.
And they pivoted again, and they ended up had some weird pivot where they basically got out of crypto and were doing like Alexa installments in hotels. Some like really like right turn. And Dan reached out, and he's like, I'm really dying not being like full-time in crypto right now. Like, can you give me some feedback on this new site? And the new site was called OnChainFX. And that was basically the backbone for what became the Messari screener. So this was like the V1 of that. And I called him pretty much immediately right back. And I was like, this is amazing. This is exactly what needs to exist, but we need like a better underlying, open data library. We should do this, and this. We'll need this, blah. And, I was basically like talking as if we were already co-founders, and he was like, hey, I haven't seen you in a couple of years. Do you want to grab coffee before we, before we go out and fundraise. And so we just started kind of catching up that whole fall, and originally thought about a holding company structure so that we could create an activist fund for when everything inevitably just completely fell off a cliff. And the thinking was, okay, if we can short these things, or we can, accumulate big positions during the carnage, then we'll be able to restructure some of these, or it'll be like interesting assets, or there'll be like cash from the ICOs that we'll be able to like play with, almost like going back to the Apple example, right?
That's what I was just going to say. Your experience there was really held you in good stead, because everybody else was like, no, we're going to the moon. This thing's never going to crash. But you knew otherwise.
Yeah. And so the thinking was, okay, these aren't stocks, but if these tokens fall off a cliff and these teams have these massive cash balances, then ultimately, could we be an activist that like redeploys that for actually interesting, like, projects, and almost becomes like the Carl Icahn of like crypto. We ended up not doing that for two reasons. One was we had a long-term mindset. We didn't want to be like known as, pariahs of all these different founders. And the second was there wasn't really any reliable data sources that you could short against, right? Because, one bad short would blow up your entire life savings because things were going parabolic.
Yeah.
So we instead, kind of went back to the infrastructure side and said, let's just invest in this analytics platform, and then we ended up combining them in mid 2018 after we raised some money.
Yeah, and I know you're also, invested in coins. You're like, and in the actual market. But I find it fascinating to see these firms grow up, sort of like Alchemy today, where they're providing services to people who are like, in the NFT space, or what you're doing as a service for people who want to trade and understand the market better. It's kind of like Levi Strauss, in the gold rush, where they're like, we're not going to go out and mine gold, but these guys need, jeans, and they need picks and shovels, and it's a really fascinating cycle to see this unfold over the years, where these services, kind of like exchanges, you have to have an exchange, and the people who get in there tend to do very well. So one of the things, just to jump ahead a little bit, I really enjoyed your 2022 thesis paper. I won't claim I read every word, but I read a very good chunk of it. And one thing I found really interesting is your discussion about like a crypto dollar. And I just wanted to take a little aside here, like, so for people who might not know, but like talking about the US dollar, it was, after World War II, the gold standard was adopted, where gold would back the US dollar. Other countries around the world then pegged their currencies to the US dollar and could deposit gold in the US to get dollars. And so it created this huge demand for dollars around the world. And so yet, the economy basically grew too fast to outpace the gold supply. So people started withdrawing their gold from the US, the other countries, and everything kind of fell apart in 1971, and they defaulted on that. And then what replaced it was a rather kind of ingenious solution, was the petrodollar, where Saudi Arabia and the other OPEC countries were convinced to only sell oil in US dollars. So any country anywhere around the world had to buy in dollars. So that has been in place since the mid 70s. And now it's kind of fraying because, the dollar, they've just been printing like crazy. And you've written a lot about this. And I wondered if you could kind of just help real quickly, like, what's your idea for this crypto dollar moving forward? And how might that sort of keep the US dollar as a sort of force in global markets?
So there's a couple things here. One of the reasons I've started to call these crypto dollars is kind of like retake the narrative of like crypto. I think sounds scary to people. So if you're going to use it, I'd like rather use like Web3 as like a catch-all term, and like crypto dollars instead of stable coins. Because likewise, Chair Gensler at the SEC is trying to like rebrand stable coins as stable value coins so that they sound more like stable value funds, which are securities. So like I like crypto dollars because I think it is a more appropriate catch-all term that is clearly distinct from a central bank digital currency. I think CBDCs are super dystopian, and like we should be fighting against them tooth and nail, like knockout, like just drag out fight.
And let me ask you real quick, is that because a central bank digital currency would be much more traceable than like US dollars in a bank account?
Yeah, they're mass surveillance systems that give centralized authorities finger on basically permissioning any transaction ever, and they would allow those same people to institute things like bail-ins or negative interest rates or outright seizures for tax purposes or whatever purposes. You basically create a system where you can unplug people from the matrix, right? And this is what's happening in China right now. It's being used as a just another tool in their arsenal to control the population and institute a social credit program. And if your identity and your behavior is tied to what the state wants you to do, and that impacts your credit and the money that you can spend at the store, I can't think of anything that's more coercive than that.
Yeah.
And interestingly enough, I could make the argument that model would be even more dangerous in the U.S. right now, right? The CCP at least has a united front, and they rule, they have this like, the mandate of heaven, right? Like as long as things are going well and there's growth and the population is net getting better, there's not going to be mass unrest. And so their incentives, you could argue, are maybe better aligned than our current political incentives given how divided everything is.
Yeah. So
imagine a CBDC in the US that literally swings on a fucking pendulum every single election between like who's going to be threatened financially and who's not. It's really dark. And so I like crypto dollars because you build on the same open platforms, you retain the same individual autonomy, but realistically, every single person is probably going to default to going to a third-party custodian or some multi-signature arrangement. And anyone that's holding at least one key is probably going to have certain information requirements that give authorities the ability to look at transactions and subpoena individuals versus like just adding to the dragnet surveillance state, right? So I think that's a good balance, and ultimately I think there's crypto dollars basically embed actual American constitutional values and rights versus what I think the federal government would like to do now, which is if you disagree with us and disagree with the truth, then you're basically a domestic terrorist.
Do you see these coming from like commercial banks? Because I mean, before QE really ramped up, that's where the majority of money came from, was through the issuance of debt. And like me getting a mortgage, that money didn't exist, and now it does exist. Mm-hmm. That's kind of gotten thrown off by everything that the Treasury's doing. But I guess where do you feel like that dollar that would be a crypto dollar, where would it come from?
I think these exist on a spectrum. You'll have some that are essentially just digitized representations of dollars that are otherwise held in a bank. And that's just a ledger record at the bank transmuted onto this digital ledger. And then some intermediary like Circle or Tether kind of intermediating like between the two. Mm-hmm. So there's an element of trust there. But on the other hand, you have debt-based crypto dollars like Maker or Terra Luna that are backed by some type of crypto collateral. And that's exposed, you have some exposure there to bank runs, and like, you could have like cascading liquidations, or, if there's, big market shock. And Maker actually survived one of these already in 2018 and 2020, actually, in a pretty meaningful way. So I think there are other experiments on the stablecoin side. I was an early investor in Fei protocol, and I'm pretty excited about Joey as an entrepreneur and just the work that they're doing. Thinking about like a relatively thoughtful and iterative approach to like a fractional dollar, but one that actually controls some liquidity and has some backstop. So it's not just kind of smoke and mirrors kind of backing the asset itself. So there's a bunch of experiments in that space, and they'll range from like fully decentralized or whatever that platonic ideal is, all the way to what I would say is like a dollar that's digitized from a bank account. I would separate CBDCs into a whole other dystopian category.
Okay. It seems like we would need Congress to act on some of this stuff. Do you think?
I mean, they're going to weigh in at some point. There's going to be a combination of executive orders, and there's going to be, studies and a lot of politicking around this in the next couple of years. I think even this week we had new developments. There was a hearing, and it seems like the Democrats themselves are split on whether stablecoins should be regulated as banks and how exactly they interface with the banking system. So like this is evolving every day, and I think it's just a function of there is so much that policymakers need to catch up on, and there's only so many people that have bandwidth for this amidst like all the other political priorities or sideshows that are kind of present day to day for them. So I don't think anyone is super optimistic that you're going to see anything in the near term. Well, actually, I'd say there's a lot of people that are optimistic that you won't see anything in the short term because there's just gridlock and misunderstanding. And no news has historically been good news from the federal government. It's better than bad policy, right? Like what we saw with the bit license, or what you see from like overreach, like what Chair Gensler has done at the SEC more recently.
Yeah, I think in my experience covering financial regulation for a while, there's always a lot of saber rattling and a lot of talk, and it tends to get heated. But then I think at the end of the day, for the most part, what ends up happening is pretty normal and pretty middle of the road kind of thing. And I think crypto's going to be no different because it's such a big industry and it's just starting to get its voice. But it'll be fascinating to see. So if Congress is behind the ball here and isn't expected to do anything in the short term on crypto legislation, that's not the case at the SEC. Gary Gensler is the chairman right now. You've come out quite strongly against him and some of the moves he's making there, both on Twitter and in your 2022 thesis, where you called him a liar and a fraud. Can crypto work with the SEC with Gensler at the helm, in your opinion?
Short answer is probably not. The longer answer is obviously a little bit more nuanced. Gensler is a political animal. This is not his first foray into the bureaucracy in DC. And I think to a certain extent, he's playing politics and hardball and trying to get as much authority and clarity for the SEC as he can, at least in part by floating his MIT credentials and the fact that he taught this subject, so he must know what he's doing, as being one of the primary reasons that the SEC should have purview here. And I'm not sure if this is a case where the squeaky wheel gets the oil, or the person who's the perceived expert gets deferential treatment when it comes to the upcoming executive order that we're expecting from the Biden administration. Whether that's going to be just more studies of how crypto should be regulated, or understanding the policy consequences from regulation or lack thereof for crypto, remains to be seen. But I think one thing is clear: he's been lobbying pretty hard for authority behind the scenes over the spot crypto markets, and this is really where the crux of the issue lies. Is that while playing this game of hardball with the industry and basically claiming that things are more or less at a standstill from a regulatory clarity standpoint until exchanges come in and basically submit to the SEC's oversight, it's having a lot of completely predictable negative consequences for American investors and for the industry at large. So, going back to the points that I made in the annual report, there's a few things that are just kind of absurd on their face, right? So the first is if Gensler was actually pursuing the SEC's mandate to protect investors, ensure fair and efficient markets, and promote capital formation, which is the third prong of their mandate that is almost always ignored. The emphasis is always on the former two, particularly from the progressives, right? Protecting investors and making sure that there's fair and efficient markets. But I think the SEC under his leadership is 0 for 3 when it comes to crypto. In particular, if you look at something like the Bitcoin ETF, Grayscale has been able to create what I think any rational investor or actor would look at as toxic vehicles right now for investors that could be fixed with some sort of cooperation or common sense on the part of the SEC.
Let me just jump in. As I understand it, one of the main stumbling blocks there has always been their inability to guarantee that Bitcoin won't be manipulated somewhere in the world, and that manipulation would obviously affect the ETF price. And so I feel like that's why they've gone the ETF route in the futures market, because at least that's regulated here in the US. And if there's manipulation, there's infrastructure there to address it. Whereas the global spot Bitcoin market, there's nothing like that. What do you think of that reason that the SEC has given for its past inaction on the ETF?
Well, I mean, you can make an argument that OPEC manipulates the spot oil price. I mean, that is what price setting is, right? And so we have oil futures and oil futures ETFs. The futures are obviously regulated, and then the ETFs can be based off of those. But the futures price is a derivative of the underlying spot price. So, even though the futures are regulated, they're still derived from the underlying spot price. I think that logic falls down pretty quickly, number one. And number two, if you look at actual investor impact, is the concern around manipulation of the spot price at a point in time. You can make that argument with a straight face in an environment where the Grayscale products, which represent $40 billion worth of investor capital, if they're trading somewhat close to par, because then you're trying to make sure that people are not getting defrauded at the margin based on some kind of manipulative action around the timestamp price. But the reality is that the Grayscale products are trading at 25% discounts. So you have these vehicles, they already trade via OTC markets and are accessible to investors everywhere, but they're mispriced by 25% because of the SEC's inaction. That is far, far more damaging to investors than marginal potential fraud, not even real fraud, just even potential fraud in the spot markets based upon overseas activities. So I think it's it is a transparent load of crap. And what Gensler is really trying to do, again, is trying to get the SEC to control oversight of the crypto spot markets through the US exchanges like Coinbase, Kraken, Binance US, FTX US, Gemini, et cetera. So, I think that's fine, right? That is their known strategy at this point. And the question is that hard line good for investors? I think the answer is obviously not, because you can just look at the raw numbers. The only way that this is going to change is if he has political pressure from on high at the White House, or some meaningful congressional oversight where they can hold his feet to the fire a bit more. Otherwise, we're basically just playing a waiting game until he's mercifully done with his term.
Yeah, and for listeners who don't know much about Gary Gensler, he comes from Goldman Sachs. I believe he was hired by John Corzine in their Tokyo office way back in the day. So he's very familiar with Wall Street. He came to the CFTC after the financial crisis when the Dodd-Frank Act had been passed by Congress and had given the CFTC all this new authority to regulate the over-the-counter swaps market. Gensler kind of bulldozed through that. He, coming from Wall Street, was not put off by any of the bankers coming in to complain about the new rules that he was making, and basically had zero fucks to give about that. So, you know, he definitely, and like you said, he's shrewd and he knows Washington, and he has had some success in regulating markets. And so when it comes to the SEC now, and I can't imagine what he thinks about crypto people if he's not, not like put off by Wall Street and the money that they have. But I do want to say, like, the SEC, in my experience, has never really done anything other than rulemaking through enforcement. I think this is still true, that even under Dodd-Frank, they were given authority over parts of the credit default swap market where it's a single name security, and they haven't written those rules yet. And Dodd-Frank was passed in, I think, 2010. And so, I don't know if Gensler's going to change that at all, or it's just the SEC just has always been like a dinosaur and lethargic and really unwilling to kind of step out from its very narrow band. So I don't know. I just wonder. I just wonder if you have any thoughts on that and how to navigate. Because I mean, obviously, as everybody knows, we need clarity here. It's kind of ridiculous that this keeps going on, and it's just, you have to wait for the next enforcement to see, kind of to read the tea leaves of what the SEC is thinking.
Yeah, I mean, the SEC was created in a bygone era when the internet didn't exist, financial markets in the US were still maturing, we weren't in a globalized economy. We didn't have nearly the same percentage of the workforce educated and kind of the information economy and financial services. Financial services was not 25% of our GDP. And, you didn't have a bona fide new type of digital asset that really kind of blurred the lines between commodity, security, currency. It's a little bit of everything. And so, the SEC's, I think, very existence and utility is up for debate. This might sound revolutionary, but I think that there's nothing more regressive in the American investment ecosystem than the accredited investor rules that basically say only 10% of the wealthiest Americans can participate in a pretty wide subset of the investment economy. And if the other 90% do want to get exposure, then they have to basically do it through vehicles like their pension funds that are ultimately paying the pension funds managers themselves, and then all of the kind of venture hedge funds downstream that have indirect exposure to crypto, and they're paying 2 and 20, right? So it's fees on fees for people to get indirect access to crypto, and if they want to go direct, the reality is that this has been the highest performing asset class in the last decade. Yes, it's been really volatile, but it's also had upward volatility that's led to significant wealth creation from people that otherwise wouldn't have had access to these same opportunities if we were talking about the private tech markets, right? So you look at Uber and Airbnb and Facebook and Google and all of these other major tech winners of the past decade. And most of those, especially with those later foreign companies, most of the gains there accrued in the private markets versus the public markets, where the winners and the early employees were extremely limited. This changes that dynamic.
Yeah. And your point about this being a new asset class, really, I feel that, because, and I feel like that's why Congress really needs to get involved and write laws about this. The financial world has been able to, absorb other innovations like the creation of the ETF market, or, the creation of futures products on interest rates or treasury bonds, because, you know, that's all sort of already native to the system. But now we've got this entirely new asset class. It's completely digital. There's wallets, there's all this new technology, DeFi. I mean, it's really, I don't see how we can shoehorn that into, you know, the Securities Exchange Act or the Commodities Exchange Act. And that's why I really feel like it's incumbent on Congress to get involved there. So just one last thing here is also those dynamics in Congress are kind of like what's, you know, the real roadblock here is in Congress, you've got like the Agriculture Committee, who has oversight of the commodities markets and the CFTC. And then you've got the Banking Committee, which has oversight over the SEC. And neither of those people on those committees in Congress want to give up their power. And they're in charge of that entirely. So, you know, it's like this huge ask to say to people in Congress, like, no, you've got to, you know, you've got to reduce your power, or you've got to like play nice here. And it's just, I don't know, that's when I get a little dispirited about how the structure of all of this works, and sort of the gridlock is kind of embedded into it.
I don't think that's necessarily a bad thing for us right now, because if you ask 10 people in crypto whether crypto would be better regulated by the CFTC or the SEC, I think 9, if not all 10, are going to say the CFTC. So, you know, let's have that conversation and let's let that, you know, work itself out naturally. But I think, you know, under Chair Gensler's worldview, crypto in its current form will not exist if he gets his way. Certainly won't exist in the US, right? Most tokens in his eyes are securities. And if you try to push all of these unique token structures onto a, you know, legacy tech and trading stack, and basically require every single developer change in a protocol to be disclosable and kind of for the approval of the SEC first before it's actually pushed live, everything will grind to a halt. And this is what happened with a token called Props that actually went through the Reg A+ registration process. Stacks had done something similar. And eventually they found that their token was basically just unusable because of the requirements of the SEC from a notice perspective, from a you know, registration perspective. And above and beyond that, it doesn't even necessarily make sense that some of those assets would have standing to, you know, make certain disclosures on an ongoing basis. That's really, I think, at the heart of what we're talking about right now. And I think, you know, Commissioner Peirce is maybe the only person that's on the right side of this in terms of thinking from first principles. How do we satisfy the SEC's obligation to the American public and fulfill its kind of mandate and mission with respect to this new asset class without breaking any one of the 3 prongs of their mandate? And
right.
something
and
like
that's sort of where
harbor,
you get into her fair harbor suggestion.
Yeah, the safe harbor that she's proposed, it does a better job of protecting investors because it creates some common sense.
Can you just tell people what is it? What is the safe harbor? What does that mean?
Well, the safe harbor is basically just a 3-year provision that any token project in the US that worked with the SEC and provided some rudimentary disclosures about their token design and their ecosystem and their kind of come to market strategies would be exempt from securities filings and full registration for a 3-year period, basically while that project gradually decentralized. Now there's some nuance and some details here that I think are worth discussing, which is what is sufficiently decentralized, or, you know, how would you actually, you know, graduate from that safe harbor? But if you look at the parameters of you know what the safe harbor actually, you know, would do, it would probably satisfy the most important challenge that we have, which is insider transactions and like how those are tracked and how people can ensure that they're actually operating on the same playing field as the professional investors and the the folks that actually create these protocols.
Yeah, the cap table transparency is really kind of lacking right now. Back to the idea, just real quick about capital formation for retail. Why not? I'm assuming you're telling people just go get a wallet and buy coins on the spot market, but are you then saying, yeah, that's great, but investors should also have access to products that are regulated and protected by, government laws and like FDIC type, that kind of thing? Is that sort of your two-prong approach?
I think, I think ideally the CFTC would have oversight over any crypto asset. We would have a safe harbor for those that created an asset and did something like a private token sale or a SAFT or one of these token warrant agreements. And then basically the things that would be left in the SEC's purview would be bona fide, like synthetic securities or like, tokens representing interest in a company proper with cash flow and whatnot. And that could either be done on a self-selecting basis, where the folks building them know that they are like actual securities but want to digitize them for whatever reason, or it would be done on a facts and circumstances basis where you would actually prove that a certain type of crypto asset was a security based on the facts and circumstances unique to that case, and then basically you could triage all of those onto something like an alternative trading system.
Yeah.
And the irony is all the major crypto exchanges have ATSs. They've just been bogged down in red tape and haven't been approved by the SEC. There's nothing that would prevent someone like Coinbase, hypothetically, from having a CFTC regulated spot exchange for things like Bitcoin, Ethereum, and all the other assets that they deem are not securities. And then if they get guidance from the SEC, having the ATS related transactions, kind of bucketed under the same company, but under kind of, two different interfaces, right? And you could hop between them as an investor.
And this, we're talking about the US here, but I think an even more troubling example of regulatory overreach is in Canada right now, where the securities regulators in Ontario turned over tweets from Jesse Powell and Brian Armstrong of Kraken and Coinbase, respectively, where they were advocating for the use of a non-custodial wallet, so that's a wallet that you control, you have the keys, those are your coins. And, they turned over these tweets to the cops in Canada about, like they're accusing them of maybe trying to subvert some local laws up there that are a huge overreach, in my opinion, about, trying to help some of these truckers with, cryptocurrency payments. And so, I mean, that's striking at the heart of sort of a cornerstone of crypto is this, your keys, your coins. And so what did you make of that?
I think the Canadian government, regardless of what you think about the convoy itself, I think it was definitely a strategic miscalculation. You started to see some withdrawals from like their banking system as a result. I think they probably had a permanent loss of trust for some subset of their population or their business partners in terms of how solid is the rule of law or financial services in Canada. And then you had the crypto component, which is people are now on notice that their accounts can be frozen at any time and in a kind of dragnet way versus going through like the proper channels and actually getting authorization on a per account basis. Yeah. So I think that's a bell that's not going to be unrung. And the question is, what does that mean for people actually doing self-custody and owning their own private keys, both in Canada and kind of elsewhere? People just like looking at that dynamic and how quickly it played out. I think I think self-custody in general is going to be the biggest battlefront for us in the next few years. I would be, frankly, I'd be surprised if we don't face a crackdown on self-custody in the US. I think at a minimum, it's likely that anyone that withdraws from an account to a private wallet is going to have to fill out some, attestation that they control the wallet that they're withdrawing to. It opens up a ton of questions about, privacy tech and, whether certain types of encryption are going to be, outlawed or strongly regulated and effectively outlawed just through ambiguity in terms of like the letter of the law or the letter of regulations. And I think it should open some people's eyes to the fact that the government does care and does pay attention now. And even if you're doing everything, even if you're not participating in illegal activities, I think the government is much more likely to demand full transparency into all of your crypto transactions, whether or not they have the statutory authority to do so. So I would actually expect one or multiple of these cases to reach the Supreme Courts of different jurisdictions. And the question really boils down to, is the government entitled to a full accounting of your assets at any point in time? Because remember, we're not even necessarily talking about dollars. What this is more analogous to is FDR's seizure of gold, and forcing people to identify a specific type of asset that they hold, how much of it they hold, and what the identification number is of that wallet, so that it can be tracked by the government.
Yeah, and if I wanted to shut down crypto, I would go right here to the the wallet issue. It is like that is, I mean, you can't get more central to this whole new technology and why it's so revolutionary than that idea. Mm-hmm. So it's been a couple of months now since your annual report came out in December. Now we're almost into March. Anything to report? Like, how do you feel things are going from where you were then? Are you more optimistic, more pessimistic? I know it's only a couple of months, but any updates on how that is all playing out?
I think, I remain long-term optimistic about all the tech and everything that's being built on the infrastructure side. I'm probably slightly more pessimistic on where we stand from a regulatory standpoint. That's not to say that everything has been negative on the policy front. In fact, I think there's actually been quite a bit of progress on the policy front in the last 6 months. I think politicians are aware that this is a swing voters issue and kind of a large, pretty intolerant minority amongst their constituents when it comes to cracking down or kind of blocking the evolution of this industry. But I think the decentralization of the industry is its greatest strength historically. It's also a weakness when it comes to advocating for certain policy positions. And we're going to have some real challenges politically and from a regulatory standpoint from a variety of fronts, right? So with Bitcoin, we're going to have a pretty significant Republican versus Democrat issue, I think, where proof of work mining is going to be, in my opinion, incorrectly vilified and targeted by the ESG crowd on the left. And that's going to create some headwinds for Bitcoin. But obviously, Bitcoin is just one asset. It's the most important asset, but it's one asset within the crypto ecosystem. On the many other assets, they're going to have to deal with the SEC, right? Are these all unregistered securities offerings? How much deference is being given to the SEC? Across the board, we're going to have these privacy and kind of self-custody issues. And those are much more front and center now with what's happening in Ukraine. Russia is going to be sanctioned. They're slowly getting cut out of the dollar system. Russia and China are already opening direct lines to denominate, certain contracts in the digital yuan instead of the dollar. This happened just even like the last few hours. That's going to happen more frequently, and we're going to learn, I think, as a country that there's limits to our power, and there's kind of waning and the U.S. dollar's hegemony in financial services.
That touches back on what we were talking about just earlier on the petrodollar system and how long that can be in place, because China is no longer buying treasuries. They're working very effectively in Africa to set up new, trade partners and all sorts of things. So you've sort of, I don't know if threatened is the right word, but you've said in the past that you might want to run for Congress and show these guys, like what's up on the crypto front. Is that something you're serious about, or was that more in the heat of the moment, or how do you feel about getting involved here more directly as somebody in Congress, like in the House or in the Senate?
Well, I think ultimately my goal is to have as large a political impact as possible with respect to an industry that is really under-resourced politically, in the U.S. right now, I think. And so there's a couple ways to do that. One is to run for office and win and kind of be part of that caucus, or part of that kind of leadership that's going to be driving things forward from an actual policy standpoint. And the other is to be much more active in educating the whole body of lawmakers and regulators, and ultimately driving some accountability through the broader political process in the form of more sweeping electoral wins. And right now, just personally, I wouldn't run for anything until 2024 anyway. I think I said as much, right? So this cycle was never kind of on the table, and I'm obviously quite busy with my day job, right? At running a fast-growing business. So the here and now, and I think the real opportunity is in helping build the ground game and kind of the broader political effort for many years to come. I think the thing that's been missing politically in DC, we have the Blockchain Association does great work. They're a corporate, kind of member trade association focused on crypto policy. Coin Center does great work. They're a think tank. There's a new political action committee, super PAC called GMI PAC that I invested in, that Messari supported. All three of those entities, both I personally and as a company we've supported. But there is a missing entity there, and that's more of an activist-oriented lobbying or advocacy organization, and then a grassroots-oriented political action committee. So this is like in the U.S. the difference between soft money and hard money, right? So hard money PAC, like grassroots donors and activation, I think is important. And then also on the advocacy side, having a group that's going to be a little bit more user-centric, activist, and quite frankly brass knuckles, I think is missing from the effort right now, because it's tough for a corporate affiliated group working on behalf of exchanges to fight the fight for users directly versus indirectly, right? So they will fight for users to the extent that it is in the best interest of their members, which are the corporates. And the corporates are going to try to do what's in the best interest of themselves first, their users second. So they'll fight because I think it's just in their self-interest to be very user-friendly to the extent that they possibly can, but they'll ultimately make concessions where an individual-oriented entity might not, or might have a red line issue, or might initiate a court challenge, or things like that. Perfect example would be on like the individual custody front, right?
Yeah.
How much is a group backed by all of the major centralized custodians? How hard are they going to push and battle for the right to, for users to have like their own like self-sovereign.
Yeah, they want to have everybody have their stuff on exchange.
Well, I don't even necessarily think that they want all the assets on exchange. It's just that if that is their loss, they don't actually lose anything, right? So like on principle, they might think that this is unhealthy for the industry, that it's in the best interest to preserve this dynamic, but they're not necessarily like big losers in that scenario.
Yeah.
And what's interesting is, I think one of the more positive and undersung developments the last couple of years has been Coinbase's emphasis on its own non-custodial wallet, which at first glance looks, a little bit out of sync with the rest of their product suite, right? But the fact that they've been investing so much time and energy and resources into Coinbase Wallet makes me believe that actually, they as like the 800-pound gorilla in the US are going to have a pretty meaningful role in continue to advance the interest of people that actually want to hold their own keys.
Yeah. Well, Ryan, this has been fantastic. It's always great talking to you. There's a telescope in the background behind you, which I think is an apt metaphor because you're always looking far into the distance and doing great work for everybody in crypto. I really highly encourage everybody listening to go check out the annual report. It's free. It's on the Messari site, and I will link to it in the show notes. And so, again, Ryan, thank you. It's always a pleasure. Hope you have a great day.
Thanks, Ben. We'll do it again soon.
Okay.